And in our business stories, December data highlighted a robust improvement in business conditions across Dubai's private sector economy, underpinned by faster rates of output and new order growth. According to local reports, the seasonally adjusted Emirates NBD Dubai Economy Tracker Index registered 55.9, up from 55.2 in November and the highest reading since July. The index has now posted above the 50.0 no change mark for 10 months running, and the latest upturn was broad-based across the three key sectors monitored by the survey. Travel and tourism remained the best performing subcategory in December, followed by wholesale and retail. Nonetheless, construction firms recorded a positive shift in growth momentum at the end of 2016, with the headline index up sharply to 54.3 from 51.8 in November. The headline Emirates NBD Dubai Economy Tracker Index is derived from individual diffusion indices, which measure changes in output, new orders, employment, suppliers' delivery times, and stocks of purchased goods. A reading of below 50.0 indicates that the non-oil private sector economy is generally declining. Above 50.0, that it is generally expanding. A reading of 50.0 signals no change. The survey covers the Dubai non-oil private sector economy with additional sector data published for travel and tourism, wholesale and retail and construction. The UAE has announced the results of the economic indicators that chart the nation's accomplishments in foreign investment, innovation and entrepreneurship development, competitiveness and the per capita gross national product, which reflect the UAE Vision 2021 to become among the best countries in the world during its 50th anniversary. The ratio of net foreign direct investment is based on the annual report of UNCTAD. The indicator rose from 2.66% in 2014 to 2.96% in 2015. According to the report, foreign cumulative investment of more than $100 billion in 2014 rose to $111 billion in 2015, placing the country among the most profitable and attractive destinations for trade and investment in the Middle East, North Africa and Asia. The competitiveness indicator is published on an annual basis as part of the Economic Forum report and covers 138 countries. The assessment is based on information and statistics issued by participating countries in addition to surveys on views of top executives and investors. The UAE topped Arab countries in the 2016-17 report and moved from 17th to the 16th position in the 2015-16 period. Concerning infrastructure, the UAE occupied the first position internationally in the quality of roads indicator, second position in airports and airlines infrastructure quality, and first position in ease of paying taxes. Dubai-based developer Nakheel and Thai hotel group Centara Hotels and Resorts have signed a joint venture agreement to create a 550-room, 500 million dirham beachfront resort with waterpark on Deira Islands in Dubai. Under the agreement signed in Bangkok by both the Nakheel and Centara chairman, the two companies will deliver an upscale resort on a prime stretch of beach on Deira Islands, which is Nakheel's new 15.3 square kilometre world-class tourism, leisure, retail and entertainment hub that will contribute significantly to the government of Dubai's tourism vision. Nakheel's joint venture with Centara is the latest development in the company's expansion into Dubai's hospitality sector and its second international joint venture for Deira Islands. The first, an 800-room, 900 million dirham, all-inclusive resort and water park with Spain's RIU Hotels and Resorts, was confirmed in February last year. As the first Centara establishment in the UAE, the new resort will cover an area of 295,900 square feet. Features include a water park, dining facilities, business centre, children's club, spa and fitness centre. The resort is anticipated to have a soft opening in 2019 and its grand opening in 2020. In order to attract more investment in the region from the growing global financial technology or fintech industry, Dubai International Financial Centre has announced plans to launch the region's first accelerator titled Fintech Hive. At a press conference, Governor of DIFC and Chairman of DIFC Authority Board of Directors, His Excellency Isa Kazim, signed the MOU with professional services firm Accenture to operate the accelerator in the IFC. To be launched in the first quarter of 2017, the Fintech Hive is expected to offer a 12-week program and empower the entrepreneurs and startups to innovate and meet the market needs while connecting them to potential international partners. Speaking during the press conference, panelists, which included senior figures of banking and IT industry, stated that with the global fintech industry attracting over $50 billion in investment since 2010, the MENA region has only been able to attract 1% of the global investments. As per the plans, the program will identify the best entrepreneurs within the IT and financial services industry and connect them to potential international customers as well as local banks. Describing the current era as the fourth industrial revolution, the regional managing director of Accenture stated that fintech industry attracted over $20 billion in investments in 2015 alone, with a huge potential for the region to tap into the growing market through supporting regional companies in trade finance, alternative finance, and P2P services.
We are living today in the fourth industrial revolution. This is what the World Economic Forum calls it. They actually say we're at the beginning of it. And that is a place where everything that consumers, everything that people are facing, if you look at various sectors of the industry, it's changed. It's changed over the last 10 years, and technology's played a significant role in that change. And as you proceed down the curve of change, not necessarily just disruption, but change because technology is enabling, empowering, introducing new business models in terms of how we behave and how we act, it is important for us to bring it all together in one place. And the whole concept of, in my view, of Dubai Smart City is really all about that, is bringing all of these elements together in a way, in a unique way that only Dubai can do, that enables us to truly understand the value and frankly improve how we work and operate day in and day out. Fintech industry is about expected to be, well, was about $20 billion in 2016. That's just globally. And this region is frankly not attracting its own share of that. So that's mostly going into China, Asia Pacific, Europe, and North America. So the intent here is to make sure that some of that is also coming into this region.